Hi, it's Paul from globaltrainingsoftware.com. Another training video. We're going to look at gold this time using the X-Spread algo, the divergence cloud for confirmation. We're also going to be looking at that opening range of gold for the European session and what happened and where those support and resistance zones are, so we can work out if we've got enough fresh air, and then managing the trade. So first of all, this is live right now. We are on Monday, I even forgot the date now, the 4th of October. What I wanted to do is highlight a couple of things first. So we got these lows on Friday afternoon on the 1st of October where we pulled back. The opening of the session was pretty scrappy, to be honest, which is usual for a Friday. We came down to find some really great support here, and then went to go and close. So this initially means nothing until during the Asian session we come to test the same sort of zone, and it goes back up again going into the European Open there. So we form a support zone here that's pretty strong. So going into that open, so the European gold pit open is this highlighted candle here. Usually we'd say go short below that opening range, but you don't want to short into this support. So then we get a 6-star sell signal on the X-Spread algo on this candle where my cursor is here, and then next we get the divergence cloud confirmation. This is from our day trading bundle. So good opening range candle there, but we've got some support not just from the Asian lows but also from that pivot that was formed during the US session on Friday. So we need to make sure we're below that. So where is the next set of lows? Now this is where I've highlighted those here, from that Asian lows and European lows just before the open on Friday here. So that forms another support zone here, if you like. So we need to know if we've got enough fresh air, and that's the main thing. We're going to enter below these lows here. Our stop is just above the signal candle here, because to be honest, if we're breaking support, this thing's gonna go. So you don't want to go all the way up to this pivot. The signal candle's here, make sure you're just above there for the stop. So an entry 1757.4 below this support is sensible, because you've had 6-star sell, you've had divergence cloud confirmation with a red arrow here in this divergence cloud, so you want to make sure. The managers are also showing higher than average volume coming in since this European gold pit open, and then that continues. So entry just below there, that gives us a risk to reward of 1 to 2 to this next support zone, which is pretty good. So simply then it's just a matter of getting the entry, getting in, and using the manager. The manager is currently set on day trading moderate. So what that means is this cloud, as long as it remains red, we stay in the trade. We get some really nice volume coming down into this support, and to be honest, there's no reason to get out at this stage, because we have higher than average volume here. This candle, this candle, this candle, trying to push through there. It does fail, but then we're getting lower than average volume, these blue dots below the candles, going sideways. Now what we're happening is we're getting higher than average volume red candles, so their distribution, the candles, there's more sellers in that 5-minute period than there are buyers, and we've got higher than average volume. And then the next candle's red, but there was rejection, there's indecision there. But right now we should have our stop probably just above this pivot here, locking in around about, let's have a look at that, 48 ticks. So that's $480 per contract there on gold. And what we're looking for is the manager's telling us to give it a little bit of room, because if it can push through, close below these lows just here, this thing could run and run and run all the way down to the next support and resistance zone, and that's what we're looking for. So the manager's keeping you honest, it's keeping you in. We've got great signal, sensible conservative entry strategy, nice run down to the next support. We do bounce off that support with some accumulation candles here, but they're not higher than average volume. They're just average volume candles because there's no dot below or above. And then we go into this sideways action with the lower than average volume because these blue dots below. So now see we're getting more higher than average volume in this current candle where we are. That cyan dot's just been printed above. This thing looks like it wants to go down, and the manager's keeping you in to maximize those profits. Now if we get higher than average volume green candle, one or two of those, then we'd get out on that aggressive exit, or if this bias cloud turns green. At this moment in time we're holding, and we're holding at around about, let's have a look, 75 ticks, $750 per one contract there. So simple. That candle's closed. Now we're pushing down even further. So 3 candles higher than average volume. We've got indecision on these last 2, so it's not plain sailing at the moment, but we're still good. What I'd like to see is this price action break and close below this previous pivot here, and then the cloud will be below, and we can adjust this trading stop just above this this support and resistance zone here. That would be my next action. Obviously I'm not going to wait on this video because we could be going sideways for hours. So right now it's at around $750, $800 per one contract, this trade. Very, very simple setup. Probably a video, similar video than I've made before, but it's about simple and repeatable. Understanding those lows from Friday, but also these Asian lows forming that support and resistance zone. So even though we've got that gold pit opening range here for Europe, then we get the 6-star sell, then we get the divergence cloud confirmation, we wait, we look for the short at this point here, and then we use the manager to manage this trade, which keeps us in. We don't panic at this support. We understand that it's lower than average volume. The cloud's still red. Just be patient and wait. Now we're trying to push through again. Hopefully this helps. I will continue to make these videos because you just need to see different instruments, different market conditions, using the same strategies, the same rules for you to build that confidence in this very, very great day trading bundle, and then that addition to this new manager now, which keeps you in the trade.